Today, we are going to be taking time to answer one of the questions that most Forex trading beginners ask or have in mind. And that's, how much can I use to start trading Forex? And some people may even ask that question as, can I use 100 rands to start trading Forex? Or can I trade Forex with 100 rands? Well, if I say, yes, you can trade Forex with 100 rands and say nothing else after that, that will not be a very correct answer. And of course, I cannot say no. So just take time with me and let's properly answer this question. As a beginner who wants to start trading Forex with real money, you obviously want to make profits. And so it's very valid that you ask how much you can use to start trading. And some beginners are young people who do not have so much money to risk. And as such, you want to know how small you can start trading. In this video, we will take time to explain how much you can use to start trading Forex in South Africa and how small you can start trading, so just stick with me. First, before using real money to start trading Forex, you want to first of all know and understand the basics of Forex trading. We have a full video on how to start trading Forex in South Africa. I'll leave a link to that video in the description below. That video explains the basics. Now, after learning the basics, it's also a good idea to practice using a demo account. After trading with demo account for some months and you feel you are finally ready to experience the Forex market, then you can start trading with real money. Now that you are finally ready, how much can you use to start trading Forex in South Africa? Well, you can start trading Forex with as little as 100 rands, and that's about $5. However, the amount of money you use to start trading Forex will depend on your preferred broker's minimum deposit. For example, HF Markets has no minimum deposit, so you can start trading with as little as 100 rands with HF Market. But Xness has a minimum deposit of $10, and so you need more than 100 rands to start trading with Xness. So yes, you can start trading with 100 rands, that's about $5, but there are some limitations, and let's discuss that. So when thinking of how much you want to start trading with, you need to consider some things. First of all, you need to consider the instrument you want to trade, how much you are willing to risk, and where you want to place your stop loss. You can use a lot size calculator to determine if the amount you have is sufficient enough to trade with. The Baby Pip lot size calculator is an example of a lot size calculator that you can use, and it's free to use. So when we enter $5, that's about 100 rands as our account balance, and we say we want to risk 50% of our account balance, and we set our stop loss at 5 pip, we see that we can trade up to 0.05 standard lots. That's about 5,000 units. Stay with me. Now, after the lot size calculator tells you the lot size you can trade with your account balance, the next thing you want to do is to check if your broker allows you to trade that lot size. You should also know that Forex brokers like Xness have lot size calculators inbuilt in their order entry module. So once you put in the volume of lots you want to trade, for example, let's say 0.01 lot, it automatically tells you your initial margin required. So as seen in the result of using the Baby Pip lot size calculator, with $5, you can open a trade for 0.05 standard lots. So what this means is that since one standard lot is 100,000 units of a currency pair or whatever asset you are trading, 0.05 standard lots will be 5,000 units of that asset. Now, since you want to use $5, that's 100 rands to trade, the next step will be to check if your broker allows you to trade 0.05 standard lots. Now, a broker like Xness, for example, allows you to trade 0.01 standard lots as seen on their website, and that is even less than 0.05 standard lots. So yes, there you have it. With brokers like Xness, you can trade with 100 rand, that's about $5 in South Africa. But there are some limitations. Now, let's take time to explain the risks of trading with small capital. First, you can only trade small lot sizes such as micro or nano lots. 2, you are at risk of a margin call. CFDs are traded on a margin, and what this means is that whenever you trade CFDs, you have to use leverage. We have explained the whole concept of leverage and margin in the video on how to start trading Forex in South Africa. So if you missed that video, do well to watch it. CFDs are traded on a margin. What this means is that every time you open a trade on any CFD asset, you will need to use leverage. And whenever you use leverage, your broker always has a margin requirement. Margin requirement is the amount of capital that you need to open the position. And whenever your margin falls below a particular threshold, you would receive a margin call. Now, the essence of a margin call is for you to top up your account so you can have more margin to maintain the margin requirements. So now let's explain why getting a margin call is one of the potential risks you face when you use small trading capital. So let's say you use a capital of $5, that's roughly 100 rands, yeah? And you use a leverage of 1:100. And your broker has a margin call of 60%. With a leverage of 1:100 and a capital of $5, you can control a position worth $500. Margin requirement for this trade is going to be $5. The broker will send a margin call when your margin drops below 60%. Now, what this means is that in order for you to avoid a margin call, your account needs to have at least $3. That's 60% of $5. You need to have at least $3 in your account as margin, else you get a margin call. When you get a margin call, it means you need to top up your trading account. What this means is that if the trade does not go in your favor and you begin to lose, all you need to lose is $2 before you get a margin call. And $2 is so small. It's very easy to lose. Failure to top up your account immediately will result in your broker forcefully closing your position as the prevailing market price. This will lead to losses, and this is one of the reasons why most traders lose money. However, you should know that trading small lot sizes is not entirely bad as a beginner. As a beginner, it's also okay to start small. As a beginner, trading small lot sizes can even be beneficial because it allows you to learn the mechanics or the dynamics of the Forex market without risking significant trading capital. So it's not bad. However, you should know that profits from trading small lot sizes are almost insignificant, especially when you consider that you would have to pay your broker fees. When you factor in your spread and maybe even commission, you would realize that you have little or no net profits. But for beginners, it should be more about learning than earning. So trading small lot sizes may not be bad. It allows you to learn, to experience the market, to develop your trading strategy without risking so much money. But for an experienced trader who is looking to actually profit from the market, you will need to trade larger lot sizes and volume, and this will require that you use more trading capital. If you're an experienced trader who is looking to make profits, 100 rands will not cut it. You will need to use much more money to trade. Just before we proceed to talk about the ideal amount of money you should use to start trading Forex, you should also know that when you trade Forex with small capital, you are bound to set your stop loss very close to your entry price because then you have small capital. You cannot, there's so little to risk. And when that happens, if the market is volatile, it's very easy for your stop loss to be triggered. And if this happens, it means you have lost. You lose money. So now let's answer the question, what is the ideal amount of money to use to trade Forex? To answer this question, let's see what brokers recommend. FX Pro recommends that you fund your account with $1,000. Now, this does not mean that you have to use the entire $1,000 to open one trade. No. When you fund, as FX Pro recommended, when you fund your account with $1,000, you can use just $100 to open a trade per time. Now, AvaTrade, on the other hand, recommends that you fund your account with between $1,000 to $2,000. Now, your broker may have a recommended minimum deposit. Most brokers have a minimum deposit. But in a situation where your broker does not have a minimum deposit, then you may want to consider funding your account with at least $500. Now in rand,
that's about 9,000 to 10,000 rands.
Is a better amount of money to start trading with. That's to deposit into your account. It will give time for the market to breathe and allow you to ride the volatility without making unnecessary stops. However, if you wish to trade high risk assets like stock CFD or soft commodities, then you need to start trading with at least $2,000. This is because these asset classes are very volatile. Their prices swing up and down very widely. And when you are undercapitalized, then you are at risk of a margin call. We already explained the risks of having little capital. But remember, as a beginner, you can start with small capital. It helps you learn while risking very little amount of money. I really hope that you found this video helpful. And if you did, subscribe and of course like this video. I also like you to leave a comment. And as a trader, especially as a beginner, you deserve a Forex trading community. And we have one for you. Just visit mytradinglab.com. The link will be in the description below. I'll see you in the next video.